Hello, everyone, and welcome to the Specialist Trading presentation of three key strategy rules. Now, I'm excited to be giving you these three rules because they make up one of our most consistent strategies in our upcoming Elite Stock Trading College. We only give this college that has to do with stock trading just about once a year, maybe once every couple of years, and I'm excited to be announcing it that we will be giving it very shortly in the near future. So this promises to be a great presentation. Once again, I'm going to be giving you three of the rules of one of our best strategies in terms of consistency that will be featured in the Elite Stock Trading College coming up very soon. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And for those of you new to my webinars, we are an educational company. This is where we differ a lot from other webinars you may be attending because our sole focus is simply to educate you. Even though we have strategies, and as you'll see, I'm going to be sharing with you rules to those strategies and ways in which to trade them. We are not about simply force-feeding you signals and telling you what the perfect stock to trade is or the perfect market or the perfect time frame. We really don't believe in that. In fact, we believe actually that that's a recipe for disaster. This is why, in my opinion, why most traders fail is because you're having someone force feed you signals or having them make all of your trading decisions for you. I mean, think of it. Look at your own trading. You go to a chat room every day to find out what to do, what everyone else is buying or selling, or what everyone else likes. Do you watch the news and wait for every news announcement to come out before you make a decision? Do you have tons of indicators that have to all line up before you can buy or sell? This is the way most people trade, and once again, in my opinion, why most traders fail. Now, I can say this because I've been trading for four decades now, and when I first started out, I fell into that category. I had a very difficult time trading, and I was doing probably the same things that most traders do. I started my 40-year career on the floor of the Pacific Stock Exchange. I was first on the floor for a total of 16 years. In 9 of those years, I was a specialist. That's where we get the name specialist trading. If you're not familiar with what a specialist is, if you ever Google those old pictures of the trading floors back in the 20s and 30s and see the people yelling and screaming on the floor with tons of paper on the floor, the specialists were those gentlemen behind those large wooden podiums that made markets in roughly 50 or 60 stocks. So I did that for a total of 9 years. I traded through the crash of 1987 and the bull market that followed. I've been involved in just about every market environment imaginable. Straight up markets, straight down markets, sideways markets, quiet markets. I've traded just about every system, strategy, or method you can think of. So over my 4 decades of trading experience, I know now what works in terms of consistency, and I know what doesn't. So this is what we do at Specialist Trading. About 8 years ago, I teamed up with Pro Trader Strategies, and we formulated Specialist Trading, which just simply educates all of my students around the world in virtually over 110 countries actually around the world, in every state in the United States, all of the tips and techniques that I've accumulated in my 4 decades of trading. So we just want to educate you to put the power back in your hands, and you'll see how much time and energy we devote to really educating you while I share with you these three main rules today. But before we begin, as always, we're required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of different examples applying these strategy rules, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. So once again, we, as well as everyone else, is required to show you this prior to any presentation. So as you're taking a brief moment to view the disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. If you haven't done so already, probably a good thing to copy down our handle right there, at SPCLSTTRADG. Every day I post a few things, anywhere from little bits of wisdom along the way that I've learned about trading to actual signals that our strategies have generated, just for educational purposes only though. In fact, just a couple of days ago, I tweeted that a majority of our strategies, including one in which I'll be sharing with you today, generated some very nice and multiple buy signals in the market. And as you can see, we had this very nice rally yesterday. So there's a lot of great free information, and feel free to follow us on Twitter. Now, once again, when I first started trading on the floor, I don't want to say that I was born with a silver spoon in my mouth and that everything was simple from the minute I first started trading. I struggled tremendously, probably the way many of you might have, or perhaps many of you are going through right now. So I know what it's like to really feel desperate and really very disappointed about all your hopes and dreams about trading. My first couple of years, I was doing all the things I had been taught, all the things that I'm sure you were taught. I was looking at news, I was looking at earnings reports, I was following all the things that, conventional wisdom said would work. And guess what? They would work every once in a while, but the times they didn't work, I would usually give everything back. And I did this. I struggled for a good year and a half before I was lucky enough to come in contact with some mentors on the floor. These were specialists themselves who made markets in roughly 50 or 60 stocks as well. And they saw how much I was struggling and how disappointed I was, and they turned my way of trading around by teaching me some sound but simple fundamental rules and ways in which I will be sharing with all of you in the trading college. So this is what I learned on the trading floor. And I really believe that because I've applied all these to my trading, they have helped to sustain me for actually going on 40 years now. They said, Steve, in order to be a successful trader, successful trading should be non-subjective. Okay, so what exactly does this mean? Well, non-subjective means that two traders looking at the same chart should come up with the same analysis. Now, how many times have you looked at a stock or thought about the market or a currency pair or anything you're trading and had one particular idea, and you talk to someone else or see someone else on TV say the exact opposite? Okay, this is not the way trading should be. Trading is cut and dry. There shouldn't be tons of variables and a lot of discretionary thinking. It should be very non-subjective so that it's black and white. Once you look at a chart, you'll be able to tell whether you should be buying and whether you should be selling. That's simple, okay? They also said that successful trading should be consistent. Now, what does that mean? Because everyone wants to be consistent. Well, if you go to webinars today, which I'm sure a number of you do, too many of these so-called educators or websites are always preaching that they have the best strategy that's going to make you tens, if not hundreds of thousands of dollars in a relatively short time. The percentage rates are tremendous, and they're looking to hit home runs. This is the way most traders start out. I know I did. I wanted to hit a home run and become a millionaire my first year of trading. But that's not the way you become a successful trader. Successful trading should be consistent, meaning that it should be about a nice steady upgrowth in your consistency, in your profit. So in other words, a two-step forward, one-step back approach. Every once in a while, our methods and techniques do hit home runs, but we're not looking for that. We are looking for sustainability, something that will, even though it has maybe a minor loss every once in a while, will come back quickly, recoup that loss, and get back on track. I know everyone's looking for that home run, that great system, that great methodology that will, buy you that extra house or car right away, or make you self-sufficient. You won't have to work anymore. But trust me, when I worked on the floor, I knew of a lot of traders who made tons of money in a relatively short time, anywhere from hundreds of thousands of dollars to millions of dollars. And guess what? Not one of them is trading anymore. Most of them have lost it all and are not even trading at all. They're entirely different businesses. So what good was that method or technique that made them all that money? Because ultimately they gave it all back. What we want is something that is consistent. 2 steps forward, 2 steps back. And all of our methods have high levels of consistency. Now, successful trading should also be as simple as possible. If you look at a lot of traders who've been trading and have these webinars or websites that have been trading for a relatively short time, which can be anywhere from 5 to 10 years. That really actually is a short time to be trading. It's not very long. Most of their plans are extremely convoluted, very complicated, lots of rules, lots of variables. You have to look at news. You have tons of indicators. There's a lot of things to discern, and it's just too complicated. But if you look at the traders who've been trading for 20, 30, 40, 50 years, most of their trading plans are extremely simple. Maybe 4, 5, 6 rules tops, maybe 1, at most 2 indicators, okay? Very, very simple. This is the way our trading is as specialist trading. Most of our rules have maybe 4 to 5 tops in the strategy, and most of our methods only have 1 indicator on average, okay? So they're extremely, extremely simple. I was always taught that the more complicated your trading plan is, well, the more valid it is in terms of being successful. But in actuality, what I've learned is the opposite. The less complicated and the simpler your plan is, the more you will be on the road to consistency. And then lastly, and most importantly, what my mentors taught me was that successful trading should make you a part of the process. As I stated earlier, most traders right off the bat take themselves out of the game. All right, what do I mean by this? Well, if you are going to a chat room every day or a website or a blog, or if you're waiting with bated breath for every news announcement to come on, what you're basically telling the markets is, I don't know what to do. I don't have enough knowledge or enough experience or enough confidence to make my own decisions. So I'm waiting for you guys, whatever it is, to tell me what to do, whether it's an indicator, whether it's some guy on TV or some guy in a chat room. And that really, once again, is just a victim and a losing mentality. You have to be in charge of your own trading. It would be just the same thing as if an airline pilot, once he got himself up in the air, said, well, listen, I really don't know how to land. What do you think I should do? Okay? Or a brain surgeon saying, I really don't know how to operate on this guy. What do you think I should do? All right? I know that would sound ridiculous, but trust me, this is the way the majority of traders trade. They're in a trade, they have no idea what to do, and they go to a blog or website to find out where to exit, where to enter. And it's the same thing. It's your hard-earned money. You should be in control. You should be in charge of the decision-making process. And this is why we say, in order to be a successful trader, you should be a part of the process. Now, the good news is that all of our strategies, all of our methods, all of our techniques in our elite stock trading colleges incorporate all these categories, and most especially the last one, making you a part of the process. As you can see here, my goal is not simply to force feed you signals. It's not to tell you what the perfect market is, the perfect time frame, the perfect stock to trade. Don't believe in that. If I did that, I would be going against my entire philosophy of trading. My goal is simply to teach you these things, to show you what helped me, to show you what has sustained me for 4 decades, and hopefully it will be able to sustain you. So we are just simply and first and foremost an educational company where our only goal is to provide you with education that has stood the test of time. We work with you. We don't just give you this education and say good luck. We work and mentor you along the way and mold all of these different techniques and methods so that you will feel comfortable trading them and ultimately making your own trading decision. That's what we do at Specialist Edge. That's what we feel, honestly, is the only way to become a consistent trader. All right, so with that out of the way, I'm going to start sharing with you what's offered in the college, and I'll give you these rules that you can actually start applying as early as today with your current trading plan. But let me just share a few things with you. Before we begin, I know a lot of you like to ask questions, and I want to take all of your questions, but if you could kindly wait to the very end. We have a rather large crowd here today, and if we stop for each and every question, this short half-hour presentation may turn into a 5-hour presentation. So I'd like to really share with you everything without stretching it out too much. So if you have a question, kindly wait till the very end. We'll reserve the last 10 or 15 minutes, and I'll promise to answer each and every one of your questions. The only one question I will answer is the most common one, and that is this being recorded? Yes, it is. We record all of our presentations, so if you're having technical difficulties or if you have to leave early, I totally understand that. You can request a link to this recording from Pro Trader Strategies, okay? All right, so kindly hold off for any questions until we get to the last portion of the presentation. Let's begin. Now, here's what we're going to be offering in our stock college. Here is the curriculum. It's 6 weeks of live trading, okay? And we're going to offer you all this information in a classroom setting. So you'll be able to ask me over the internet. Questions, we can stop as long as you want. Most of our classes last anywhere from a couple hours to 2 or 3 or 4 hours, okay? It's all up to you. We hold them 1 day a week, and in the first week, we're going to cover the foundation and the building blocks of stock trading. Now, we touched on this a little earlier today. We basically go into our philosophy and everything you need to know about trading stocks. And we're not going to go so much and introduce you and tell you what a tick is or tell you what the best market is to trade or time frame. We're going to just share with you all of our philosophies and concepts to trade. Now, in weeks 2 and 3, we'll get into the meat and bones of it. We'll start talking about stock strategies, most particular stock strategy 4 and 8, because those we feel are the best bangs for your buck. These 2 strategies are the best ones we feel that will get you on that road to consistency. In week 4, we'll share with you our most popular used tool around the world. That's the PET D. You've heard me speak about this in other presentations. It's our trend directional tool, something I learned 40 years ago on the floor. We're going to give you total, complete access to that. In week 5, we will stretch it out even more by instructing you how to trade and use these strategies as well as the PET D with options trading. So for all you traders who like to trade options and say, well, Steve, I like trading stocks, but I can't actually purchase them. I'd rather purchase the options or some type of strategy. We will instruct you on that as well. And then lastly, in the live class in week 6, we'll put it all together. We'll talk about advanced trade management, and we'll answer any questions you may have, okay? So let's go a little bit further into this, and let's talk about the strategies, because we know that's what everyone's interested in anyway. So let's talk about what strategies we're going to be offering. The first one is our most popular one, which is strategy number 4, okay? And as we see here in this most recent chart here in EL, looking at this in hindsight, going back to the beginning of the year up until this last week, we see that the stock has gone up rather nicely. How could we have taken advantage of this, though? I mean, how could we have known well before the stock started to take off that we wanted to go long and buy it? Well, here's the beauty of strategy number 4, because with only 5 rules in the strategy, we actually generated 2 signals. One way back here to go long, roughly at $78. And if you missed that, there was another one generated just a few weeks ago in the first week of March of this month at 83. Okay, so this is a great strategy to have under your belt. It works great in trending markets. It can be used as some type of consolidation method. It can also be used as a pullback method. The beauty of strategy 4 is that it's simple and can be applied in any market in any time frame. Now, if we go into our next strategy, strategy 8, one of the best things about this is that it was specifically designed for stocks. We have found that even though it can transfer onto other markets, it works the best with stocks. So that's why we are highlighting it in this year's Elite Stock Trading College, strategy number 8. Now, looking at this chart here in PRGO, this is in March here, and we see that, wow, this stock along the same times. In fact, if I could just backtrack here really quickly, we see here that in the first week of March, well, this stock generated a buy signal with strategy number 4, okay? But if we go to strategy number 8, we see here that in the very first week of March, around this area right here, guess what? Sell signals were generated. So this is what's really interesting about what we're offering you. They are totally non-related, where in the same week, one strategy can generate a buy signal. According to the parameters of the other one, it will generate a sell signal, but in an entirely different market, in an entirely different stock. Okay, so this is the beauty of this. You will get a lot of consistency in different directions. So a lot of our traders like to trade long. They also like to trade short. It's entirely up to you. So this was a really couple of nice signals generated here in PRGO, roughly about 74, 75, and the stock quickly went down to the 67 level. Now let's talk about strategy 4, because as I stated, this is our most popular and most consistent strategy, and this is the one where I'm going to be giving you the majority of the rules today. Okay, who is this strategy for? Well, basically for all students. It doesn't matter if you're a beginner or advanced. We have hedge fund traders trading this that have come to our past courses. We also have beginners. We have people that have just started trading, that have been trading for more than a week or two. Everyone gets the same basic format, okay? So it's not like we're going to give something different to someone who's been trading for 30 years and someone who's been trading for 30 minutes gets something entirely different. Everyone will get the same basic format, but then from there we move outwards. Then we start to explore and see what type of a trader you are, okay? Are you a more conservative trader? Are you an aggressive trader? We give you different insights and ways in which to approach that, so that ultimately, once again, you'll be in charge. You'll make your own trading decisions, not us, okay? Now, it was designed for traders to catch quick momentum moves. When I was first introduced to this strategy on the floor years ago, we traded it all the time, but we would trade it on minute charts or 5-minute charts because we wanted to trade in and out rather quickly. We were traders, day traders on the floor. But we can also show you different ways in which to extend your gain. So you can apply this if you want to get in and out quickly. You can also, with the techniques we'll share in the course, apply this to stay in the trade for as long as you'd like. Now, it's a pattern recognition strategy, so that we're not reliant on a lot of indicators. We don't care about news. We don't care about tons of volume. We don't care about what the institutions are doing. Remember, those are all outside sources telling you what they're doing and then having you make your decision based off their actions. We're basing our actions off of one thing, and that's the source. That's the chart in front of us. We're only basing our actions on what the market is telling us, and through this pattern, the market tells us whether it wants to go higher or whether it wants to go lower, and then we just jump on board, okay? Keep things as simple as possible, and you'll get on that road to consistency. All right, so let me share with you some of the highlights of this. It's based on concepts 1 and 2. Concept 1 is we always want to trade in sync with a trend. Concept number 2 is we want to trade with pullbacks or some type of consolidation within that trend. As I stated earlier, it's designed to trade quick momentum moves, but in the course we show you ways in which to stay in the trade longer if you'd like. All right. Now its intensity level. If 1 were the most intense of all strategies where you basically could not leave your computer to go to the restroom, and 3 were the most relaxed where you could just simply enter your orders and walk away for the day, it's a very moderate number 2. It falls right in the middle. It only uses 1 indicator. I'm going to share with you what that indicator is in just a few minutes. This can be applied to any time frame, any direction, and guess what? Any market. So even if this is a stock course, you can apply this to futures. You can apply it to E-minis. You can apply it to currency pairs. It makes no difference. All right. Now, included in the course comes our educational buy and sell indicator. So we will provide you, for learning purposes only, different indicators that when a setup, a signal is generated, you will get an arrow or some type of indication telling you when a valid setup is. But remember, we don't want to force feed you signals and have you just blindly take something because there's a green arrow or a red arrow. We don't believe in that. This is simply to tell you what to look for. Ultimately, what we want, and what most of our college students do, is they use these for educational purposes as a tool, and then once they really figure out the method under the belt, they know how to trade it, they don't use them anymore because there's no need to. I don't use them. I've been trading this for 40 years, and I know exactly when a strategy 4 signal is generated and when one isn't, okay? As with all of our methods, as with all of our strategies, all of our techniques, anything we promote at Specialist Trading and Pro Trader Strategies, we want you to learn the strategy first, and the best way to do that is by paper trading, so that we require all of our students to paper trade first. There's so much to learn through this simple process. We don't just want you to simply jump in. And you'll see with the 3 rules I give you today, paper trade with them for a while, okay? As I stated earlier, our edge is consistency. You're going to see a lot of winners using these particular rules I'm going to be sharing with you. You're also going to see, once you become a member of my courses, the consistency. But remember, consistency means 2 steps forward, 1 step back. You will have small losses from time to time. That's perfectly normal. Don't let anyone tell you there won't be losses from time to time. Think of any other profession, any other athlete or singer or politician, anything. They all go into slumps every once in a while, but then the ones that are very good get themselves out of that quickly. That's what consistency means, okay? It's perfectly normal to have small losses every once in a while, but the norm is to make them back as quickly as possible, and that's what our methods do. Okay, so let's talk about the indicators of this particular strategy. Remember, I'm going to be sharing with you 3 of the rules. This strategy has a total of 5 rules. I can't give you all of them because if I did, that wouldn't be fair to the people that have spent lots of good money to be in our courses in our college. But basically, I'm going to give you the majority of the rules. And as you can see, I'm giving you 3 out of the 5. Now, the first thing we want to know is the indicator. What indicator we're using? Well, it's our 50-period simple moving average. We call this the buy-sell line. That's it. That's all we're applying on the chart. So the only thing you should have on your chart is a 50-period simple moving average. Okay? There shouldn't be volume. There shouldn't be tons of oscillators. There should be tons of colors. Just the 50-period simple moving average. Remember, those things, if they work so well, why is it that the majority of traders fail? It's because we overcomplicate our trading by applying too many things onto our trading plan. Keep it simple. I only have at most 1 or 2 indicators. That's it on my screen. Okay, so here are the 3 rules I'm going to be sharing with you. Remember, in order to trade strategy 4, there are a total of 5 rules. I'm giving you the majority of them right now. Okay. Remember, this can be applied to all time frames, and we're just going to simply reverse these rules if we want to go short. Now, rule number 1. The closing price must be above the 50-period simple moving average. This tells us that if price closes above, then that means we're going to be going long. Obviously, if price closes below, we're going to be looking to go short. Rule number 2 is we're going to look to buy when a price bar closes in the top 25% of its range. We're going to call this the setup bar. So in other words, take any bar. It could be a 5-minute bar, a weekly bar, a daily bar. All right. You just take the range from top to bottom. Now, I know a lot of you think the range is from open to close, but I don't know how that's been changed all these years. That's just the range of the body. But the range equals the extreme high, that can be the wick, that can be the high of the bar, to the extreme low. That can be the bottom of the wick. That's what range is. It's not the open to close, okay? So just take that, whatever amount of points that is, and divide by 4. If you close in that top quarter, that's your valid setup bar, okay? And all we want to do is enter to buy once price trades 1 tick above that setup bar. I know that seems too simple, but let me show you how powerful this is. In fact, let's take it in a step-by-step process to show you. And once we're done today, you can do your own due diligence, do your research, and see how valid these 3 rules are in any strategy. You can apply these 3 rules to any strategy you currently have. All right, step number 1, price must be above the 50-period simple moving average. So as we look at this chart here in Amgen, all right, we have the 50-period plotted below. Now ask yourself, where is price? Price is above. So are we going to be looking for a sell signal? Absolutely not. I don't care what some guy in a chat room says. I don't care what some guy on TV says. If price is above the 50, you will not be shorting. I know this is the way most traders trade, myself included when I first started. But remember, we're talking about consistency. And over time, if you sell above the 50, you will have no consistency to your trading. Just like the slot machines in Vegas, you'll have a winner every once in a while. But over time, you'll most likely give everything back if you stay there long enough. Trading by buying below the 50 and selling above the 50 is the same as slot machines. Over time, you won't have anything to show for it. That's why, once again, 80% of all traders fail, because they do the opposite. Do things simply in sync with the market. If the market is above the 50 period, it's telling you it wants to go higher. So why would you sell if it's telling you it wants to go a certain way? If the river current is going in one direction, why would you try to swim upstream? All right. So here in Amgen, at the beginning of the year, in the middle of February, it was telling us it wanted to go higher because it was above the 50-period moving average. Okay. But we're not, just simply going to buy at the market. We need a little bit more structure. So we're going to look for step number 2. We're going to look to buy when a price bar closes in the top 25% of its range. This will be our setup bar. Now, the setup bar doesn't mean we buy at the market. We're just simply setting up for a buy. So as we can see here, we find a bar right here that closes in the top 25% of its range. All right. All you have to do is take the top of that wick to the bottom. You divide by 4, and if you close in the top quarter, that's a valid setup, okay, right there. Now remember, according to the other rules of strategy 4, there is a specific pattern we're looking for. I'm sorry, I can't divulge what that is. That wouldn't be fair. But you've got the majority of the rules right here. Now the only other thing we would do is once that pattern has been met, we enter to buy when price trades a tick above the setup bar's high. All right, so we've located and identified the setup bar where that green horizontal dashed line is. That's where we want to buy. Now we don't have to close there. A lot of people get confused in the beginning. They say, Steve, well, we didn't close there, so I didn't buy it. It just has to trade there, intra-bar. Okay, we don't have to close above there. So as you can see on the very next bar, we traded there, but look where we closed. We closed at the low of the day. This is where most people would say, well, that's it. This doesn't work. I'm canceling my college membership because this doesn't work. I bought it and it immediately went down. Trust the process. We're not just trading one bar at a time here, because had you stayed in the trade and done the right thing, well, look what Amgen did coming into this month. All right, this is the first week of March. So this is how simple trading can be. But the reason why most traders fail is we overcomplicate things. We have far too many indicators, far too many rules, and most importantly, we're listening to someone tell us how and what we should trade. All right, so let's look at some more recent strategy number 4, trade examples. And once again, once you become a member of our courses in the Elite Stock Trading College, you will get all the complete rules, other entry points, other exit points, stop placement, and ways in which to trade this aggressively as well as conservatively. But right now, we're just sharing with you the standard benchmark for trading strategy number 4. All right. Here's a chart in DRI. Someone looking at this would say, well, Steve, the chat room I go to says don't touch this because we're in a range market. We're going sideways, as the blue bar tells us. And, we never like to trade rangy markets because that's where you get whipsawed. That's where you lose money. Well, according to our rules, this is not a rangy market because we are above the 50-period moving average. And we have a bar here that closes in its top 25%. It meets all the other rules. So this is our valid setup. So we want to buy here. So the strategy, along with our add-on, automatically generated a buy indication on the 13th of this month. And it told us to go long DRI, where most people would say, why would you go long this? It's not, there's no news on it. The institutions are not buying this. There's no volume to tell you anything what it wants to do. We don't listen to those things. Why overcomplicate yourself with things that have no consistency? Trust me, take it from someone who traded them for years and it didn't work. All right. The market is telling us it wants to go higher. It's giving us all these clues. So all we have to do is jump on board if it trades above, run 1 or 2 ticks above. There's our entry, roughly around 75 or so, and the stock went up 3 points in the next week. Okay? It's that simple. There's no way you have to overcomplicate your trading. How about EA? What if you want to go for larger gains? Well, this is going back to February. We are above the 50-period moving average. Strategy 4, all the rules were met in the pattern recognition, and this is our setup bar closing at the very top of its quarter range. So we entered to go long right here, as you can see. It traded above and it closed above, but remember, we're not concerned with the close. We only want to see if it trades above there. So you could have entered long about 82, and in the next week or two, it went up a good 6 points, all right? But don't worry, a lot of people say, gosh, I missed that. Boy, okay, well, I guess I'll look for something else in another stock. But many times, if the stock is really trending, you will get a second chance, such as right here. We're still above the 50 period, so we're not going to sell anything. This is where most traders make a mistake. They say, okay, we've gone up high enough. Now it looks like we're rolling over, so it's time to go short, right? No, we're above the 50. We only want to buy if we're above the 50. Keep it simple. We close in the top 25% right here. In fact, we closed it very high. And according to the rules of the strategy and the automatic add-on, it generated a buy signal here. But remember, we can't go long until we trade above it. So on the 25th, we traded above it, and we went up another 6 or 7 points. Now, had you taken the first signal and stayed long the entire time, well, that could have been a generated profit of 10 points in just a couple of months. Now, you can also short this. I know a lot of traders say, well, Steve, I can't short stock. I don't have a big enough account. I can't do that. You can buy puts. A lot of our students use strategy 4, and then they simply apply options to them. Remember, we're going to devote 1 week to showing you the best ways in which to apply options. We just reverse the rules here. If we are below the 50, are we going to be buying anything? Absolutely not. I know a lot of traders may have said, well, Steve, looks like we're making a double bottom here. The other course I took says all the institutions are buying here, so I really want to be a buyer. I don't want to sell. It's silly. If we are below the 50, we only take our cue from one thing. That's the chart in front of us. That's the source of what's generating our signals. Not some guy in a chat room, or not some institutional trader, or not some guy on TV. The market tells us what to do. So simply by the very simple fact that it's below the 50, it's telling us it wants to go lower. Now, here's our setup bar. We close at the bottom of the range. It meets all the rules, so we could have gone short on the 26th, 27th of January. Now, not much happened here, but as I stated earlier, many times you will get other chances to get in, because here's another setup bar. We close in the very low of the range. We're below the 50, and our automatic add-on generated another sell on the 7th of February. Now, ultimately, if you would have gotten short again, either by purchasing a put or some type of a strategy to go short with options, or even going short the stock, look what happened. You would have gotten short the next day, and the stock fell 9 points in 1 month. Now, pay particular attention to this right here, this large gap. As you can see, after we would have gotten into the second trade, all of a sudden there was a large gap to the downside. Now, most traders would have said, well, Steve, that was some news that came out, or some earnings, or somebody downgraded the stock. Well, sure, that's great. And did we know about that? Why is it that strategy 4 generated 2 signals well in advance of that news? Why? Because the market tells you what it wants to do, most likely in advance. So you don't have to worry about news. I stopped looking at news 40 years ago. If there was ever anyone that needed to look at news, wouldn't you think it was the one who was making markets in 50 stocks? Now, I did that for a couple of years, and guess what? It didn't make me any money. My mentor said, Steve, if you're not investing, you don't need to be concerned so much with the news. Sure, you can look at it if you want to, but take it with a grain of salt, because the market most likely will tell you in advance. So as you can see here, we knew to go short FOSL well before any type of news or any type of announcement came out. Now, a lot of traders say, well, Steve, this looks great, but I don't trade daily bars. I like to invest more. You know, I like to invest in trade in my IRA. I will look at weekly, even monthly bars. Okay, nothing changes simply because we change the time frame. If we're looking at a weekly chart in Apple here, we're not going to change the rules at all. Just because we change time frames does not mean we change rules. Where are we in relation to the 50-period moving average? We're above, okay? We have a bar here that closed in its top 25% of the range, okay? It's a valid setup bar. It meets all of the other rules. So according to this weekly bar, we would have entered on the next week here, and that was in mid-November of last year. Look what's happened to Apple. Okay, we didn't listen to any news. We weren't looking at earnings. We weren't looking at what was going on economically with interest rates. We don't care about those things. The market tells you what it wants to do. That's the only thing you need to listen to. Keep your trading simple. Don't overcomplicate it with these things that show no signs of consistency, and you'll get onto that road to successful trading that you've been looking for. Now here's a weekly chart of Apple. We can just as easily trade strategy number 4 on a 5-minute chart. The exact same rules, being above the 50-period moving average, setup bars that close in the top 25%, buying when you trade above it. It makes no difference. Here's a 10-minute chart of SNDK. The same exact thing, strategy number 4. We just reverse the rules, okay? We're below the 50. We look for a bar that closes in the bottom 25% of its range. We go short once it trades 1 or 2 ticks below. Nothing changes because we change markets or time frames. Now, as you've just seen, these strategies work really well with stocks. Okay, in fact, one of them was even designed just for stocks. But the beauty of them is that you can also transfer them onto ETFs, to futures, to forex markets, and to commodities. So if you like to trade multiple markets, that's perfect. You'll be able to use the same strategies. You don't have to change anything. Here's a weekly chart of the Canadian dollar. Price is above the 50-period moving average. We have a bar that closes in the top 25%. It meets all the other rules, so the strategy add-on generates an automatic buy signal. But we can't buy unless we trade 1 pip above the high of this bar. Well, we did, and look what happened to the Canadian dollar. 1,100 pips in the following months, okay? $11,000 per contract. How about crude oil, okay? A sell signal in crude oil, although this was rather aggressive because we were oscillating above and below the 50-period moving average, this bar, the majority of the bar was above, but it closed below. It generated a valid signal to go short, and look what happened to crude oil, okay? And you had another chance to go short here as well if you missed that. And then strategy number 8, here's the ETF, QQQs, the ETF of the NASDAQ index. A lot of our traders like to trade this particular ETF. This was actually the beginning of the year. A strategy 8 signal was generated the first week of January. A lot of people were saying, how can we go long here? You know, it looks like the market's getting ready to roll over. We don't listen to any outside sources. We only listen to the chart in front of us. We're above the 50. The add-on generated an automatic buy signal. You would have been purchasing right there. And look what happened to the QQQs coming into March, okay? Now, a lot of people say, well, yeah, Steve, how would we have known that the market was going to have a big rally? We don't know, but you will have a higher level of consistency if you only listen to the source. And what is that source? It's the chart in front of you, okay? Now, we're also going to throw in 2 extra bonuses to increase your odds for success even more. We're throwing in option trading because we know a lot of you are option traders. You don't actually purchase the stock. That's fine. You can take the same signals in this live week where we'll be talking only about option trading, and you can take the same signals and apply them to different strategies with options. We'll have an actual option trader in here teaching you how to do that. So 1 week will be devoted simply for option trading. And we'll also have another week covering one of probably the most powerful tools we have for trading. This is the ATM method. Another method I was taught some 40 years on the floor. It's advanced trade management. Okay, this is a specific formula that you can apply to your trading that will increase your odds for consistency in terms of money management. Now, I'd like to share with you, give you a little bit more information without giving it away, because this particular method is so powerful. We only offer it in our colleges. All right, this is not even a course that we sell separately or not something we talk about in our free webinars. This is only something we give in the colleges because it's that powerful. Now, I'm sure you've all known with any strategy, it doesn't matter if it's one of mine, it could be one of yours or another educator. Oftentimes you'll be trading it and it will be amazing. You can't lose. Every trade is a winner. And then all of a sudden, some days you trade the exact same strategy and every trade is a loser. For example, here's one of our strategies. And as you can see here, everything generated profits in this particular example here. The sells were profitable and then the one buy was profitable. But the exact same strategy later on, using the same rules, generated nothing but losses because the environment changed. The ATM is a great method. It's a great tool specifically designed to keep you out of these markets. And we share with you exactly what that proprietary formula is in this course. So we spend 1 week covering that as well. Lastly, we throw in our most popular tool in terms of defining the short-term trend. That's the PET-D. Now, this is something I've been using in my trading every day for virtually 4 decades now. It's that popular. I used it today prior to entering and starting this presentation. I used it in my morning trading and had one profitable and one break-even trade. Let me show you what this is. It's a proprietary color bar algorithm. We're keeping it in-house because it's that powerful. But that's okay. Your success does not rely on you knowing what the formula is based off of. Your success is knowing how to apply it correctly, okay, by someone who's been using it for 4 decades. Now, what we do is we add a color bar algorithm to your charts. So if you see a series of green bars, it's telling you that the short-term trend, not the overall trend, but the short-term trend is up. And a series of red bars tells you the short-term trend is down. That's how simple it is. You don't have to look at different time frames. You don't have to look at tons of indicators. You don't have to put all this convoluted logic together to tell you what the time frame is. All you have to do is simply apply the PET-D, and the colors of the bars will tell you, okay? So as we look at this chart in AA, you see all the bars are green. Now, once again, someone looking at this in hindsight would say, well, yeah, Steve, it's easy to see that we were in an uptrend. But how did the PET-D know you were in an uptrend? Well, back here before the rally started, okay? All the bars were green. And it's the same thing to the downside in win, okay? Someone looking at this in hindsight would say, well, oh, yeah, well, I knew we were going down, sure. But did you know you were going down well up here before the sell-off started, okay? Some 30 points higher. Well, the PET-D did because it was coloring all the bars red. And once you know the color of the PET-D, you can apply actually any strategy to that direction. Now, let me show you this most recent chart here of Aetna. All right, now looking at this chart in March here, we can see that, well, yeah, the stock looks like it's going up. It has a really nice uptrend. I think I'm going to buy it, right? I don't need the PET-D. All I need is to know that we're in an uptrend, so I'll look for buy setups, okay? And then all of a sudden this happens. So we have to be quick. Is there some way we could warn ourselves, not trying to pick the exact top to tell us when the trend has changed or the exact bottom, but just an early warning trend detector that could tell us when the trend is about to change? Sure, the PET-D does that many times. As we see here, well in advance of that rally, the PET-D was coloring the bars green, and well in advance of the sell-off, it gave you the first red bar, just 1 bar after the high. So this is the beauty of this. You will know in advance whether you should be in the market, whether you should be out, whether you should be long, whether you should be short on a short-term time frame. Now you can also apply this to long-term trading. This is one of the hidden secrets of the PET-D, which we've discovered over the years, that we basically use it for daily bars, weeklies, and even intraday trading. But we can also apply it to monthly, long-term. So if you like to, invest in your IRA and know whether you should be long the markets or ETFs, this is a great, great tool. Now here's one of the standard benchmarks we use. As you see here are some bar charts with the PET-D added. The standard rule of thumb is when you see 3 consecutive bars of a particular color, either green or red, that will signal a trend change. Now in this case, we had 3 consecutive red bars. The first time we saw that, and look what happened. There's the trend change. Now this works more consistently with longer term charts. So if we look at the longer term chart here of the S&P 500 index, these are monthly bars going back roughly 22 years. Okay, we see all the peaks and valleys that were created on a monthly time frame. We see how we went straight up and we hit the dot-com top, and then the dot-com crash hit and the market went straight down. And then we rallied again until 2008, and then the banking crisis hit and we had a terrible recession going into 2010. And then As you can see, we've been rallying ever since. Now, a lot of people are saying, well, this has got to end pretty soon, okay? Maybe with interest rates, maybe with a new administration, maybe with what's going on in Europe or with terrorism. We've got to hit some type of top here, right? And go into another 2 or 3 year type of sell-off. Well, it's going to happen one day, but who knows when? Well, the PET-D is a great tool for giving you a clue as to when that can happen. Because if we simply apply it, remember the rule of thumb is 3 bars of a different color indicate a trend change. So all the way coming up into the dot-com crash, we had 1 red bar, but we're looking for 3, and we would have had a signal to get out right here. This was in 2000, well before this massive bear market started. And you could have missed all of that dot-com crash. And in 2003, with a signaling of 3 green bars, you're back in the market. And you would have been able to ride it all the way up into 2007 when 3 red bars appeared, well before the massive crash of 2008, 2009. You would have missed all that. And in 2009, 3 green bars appeared. And you would be long ever since. Sure, there have been a couple of red bars every once in a while, but remember, we're looking for 3 consecutive red bars. And as of now, we have not seen one. The last one we saw was in 2000 and the beginning of 2016. So we're okay. So this is the beauty of having this. Wouldn't you like to have this tool for your long-term investing? So we can use it short-term to tell us what the short-term trend is. We can use it for long-term to keep us for our long-term investments. There's another way to use the PET-D. You see the many versatile uses of this. We can also confirm trades. So whatever strategy you're trading, whenever you get a signal to buy or sell, the PET-D can confirm that. So as we see here in this older chart of Twitter, we have 2 buy signals, okay? Now, how could we know whether they were going to be successful? Well, we just apply the PET-D, and as long as that buy signal is in sync with the direction of the trend, in this case green, you want to take the trade, okay? This will give you added assurance that you are in a consistent trade. A lot of times it will keep you out of losers. Now, here was a buy signal generated by one of our strategies, and as you can see, it would have generated into a loss. Here was another buy signal, and it never generated into anything, but had you taken it simply by buying at the market, it was another loss. So let's add the PET-D and see how it could have helped us. Well, here's our buy signal. In order to go long, this would have had to have been colored green. And what color was it? It was red, because the short term had already changed according to the PET-D. So even though we're above the 50, it's telling us to stay out, and we would not have had a loss. Now, this one was confirmed by the PET-D. So someone would say, well, Steve, here it didn't work. But remember, our entry is what? 1 or 2 ticks above. So by the very fact that we never traded above, you would have missed this already. So with the techniques and tips we give you, we will keep you out of trouble, even when you are generating a valid signal. Now, you can also apply this for short-term trading with the markets. There's an older chart of the Dow Jones Index, all right? These were all valid buy signals, strategy number 4 buy signals, and they were all colored green by the PET-D. So this was, not saying that you're going to trade the Dow Jones Industrials, but this could have told you that there were going to be rallies in the market every time you had one of these directional identifiers by having a strategy signal. Now here was another signal generated, but this was the very first signal generated that was colored red. So that was telling us that, well, the other ones generated nice, 500-point rallies in the Dow. This is saying that we're most likely not going to have a rally. So we shouldn't look to go long anything else. In fact, we should stay on the sidelines, and that would have been a good idea because look what happened in the market. So you see how the PET-D would have given you early warning that this was not a valid signal to take. As we go through the college curriculum, once again, you have 6 weeks of live trading of really intense information that I've accumulated in 40 years, and I will be your personal instructor in these live classes. Now, one thing that we didn't speak about, for learning and educational purposes only, we also provide you with signal indications in the terms of email. So every once in a while, when a signal has been generated, we will give you emails showing you this for educational purposes. Remember, they're just there so that you know what to look for, not to blindly use as a signal service to trade. So as you can see, on the 14th of this month, Tiffany generated a buy signal in strategy number 8. Okay, so as a student of mine, you would say, okay, wow, I didn't see that. Let me look at my Tiffany chart and see how a signal was generated. Once you have the rules, you would be able to find it and say, yes, I see it now. I see why a signal was generated. If you didn't, then you could contact me and I could explain to you exactly what the rules were again, and we can go over so that you fully understood. But having looked at the chart, this is the strategy 8. This is Tiffany. Now, someone looking at this will say, why would you have a buy signal? The stock is going lower. The market looks like it's topped out. Why would you generate a buy signal here? Remember, this is not the same rules as strategy 4. I gave you those rules, those 3 rules. Strategy 8 is based entirely off different rules. We don't have to close in the top 25%. It's entirely different. But having said that, it still generated a buy signal, and it was verified by the PET-D. So you would have been able to take that with confidence, and look what happened to the stock. Quickly went up from 90 up to 96 in the next week, 6 points. Now, if you go to the Pro Trader Strategies and my website, Specialist Trading, you'll see there are a number of testimonials from past students in our colleges all over the world who have become consistent. But I'd like to read you one that was in one of our colleges that stated, says, Primo's mentoring has been a cornerstone of my career over the last 25 years. As I type this note, 26 or 40 positions in our portfolio are from a swing trading strategy of Primo's that I specialize in. Primo's greatest gift was separating me from my emotions and teaching me to listen to the market. This is a hedge fund manager who was a member of one of our courses. And so it doesn't matter whether you've been trading for 20 minutes or 20 years. Everyone can gain something from these methods that we teach. So let's recap before we go into any questions that you may have. Remember, trading should be non-subjective. You'll be able to look at the same chart and come up with the same scenario that I will. It should be consistent. You just saw the consistency in our methods. I showed you a couple of signals that didn't work, but I showed you how you can become consistent by applying certain techniques that will either keep you out of those losses, or at least if you do have a loss, they will be very small, all right? The trading should be as simple as possible. Well, I just shared with you 3 of the rules up to one of our best strategies in terms of consistency. It only has 5 rules, so you have the majority of the rules already in your pocket. And then lastly, it should make you a part of the process. I think you can see right now that just by sharing all the information, I want you to make your decisions. I'm not going to be here and tell you, okay, tonight, this is what we want to buy for tomorrow. We don't believe in that. We want to give you the information so that ultimately you'll be able to work with me and then go out on your own. That's the only way to become a consistent trader, in my opinion. So here's what we're offering you in our Elite Stock Trading College. 6 weeks of detailed instruction. 2 proprietary strategies. We're going to give you different variables for entries, different variables for exits, different variables for stops, according to what type of trader you are. These are also going to be supplying you with educational signal alerts, all right? We're going to also throw in the PET-D tool. That's the Primo Early Trend Detector. We're spending 1 week where we devote entirely to option trading, how you can apply these signals to options. We're also going to give you the Advanced Trade Management. That's a tremendously powerful tool for keeping you out of the markets, okay, when the markets aren't in sync with your particular strategy. You have full access to all the strategy rules coming from someone with 40 years of trading experience that have used all of these and continue to use all of these in his daily trading. And you have lifetime correspondence with me. This is not something that after 6 weeks, we throw you to the wolves and say, good luck. You can always contact me. I've been trading for 40 years. I have no plans to stop trading now. There's so much information in our Elite Stock Trading College that I can honestly say, a year from today, you will have wished you became a member of this live course, okay? That's how powerful it is. If you've been struggling with your trading, if for the very first time you said, you know what, I'm going to get on track, I've got too many years where I haven't made any money, now is your chance to do this, okay? Now, if we combined all the things we're offering, everything we're offering you in this course, in this 6 weeks, it would amount up to close to $12,000 worth of information and of courses and of strategies. Here's what we're doing today. We're discounting the price down to $44.95. The usual cost is $49.95, but we're discounting even more down to $44.95, but we're also throwing in payment plans. So you don't have to come up with that lump sum. You can construct a small payment plan with a small deposit. You can be up and running and in the live classes as soon as we begin. So you want to take advantage of this, and that also includes the 1 year of trade signals for educational purposes. Okay, so you'll get trade signals so that you know what to look for. Remember, $49.95 is the usual price, which is discounted about 50%, but we're discounting it another $500, another 10% down to $44.95, and we are also throwing in payment plans. So you can just come in with a small deposit and you can still be in the college. So here's how to take advantage. My sister site, which is Pro Trader Strategies, markets and promotes all of my courses. They're the ones to talk to. You can email them, but I would strongly suggest calling them, because that's the way you can put together a payment plans. They have trading consultants manning the phones right now. You can ask them anything you'd like. There's no obligation. They will help you in finding out if this is right for you and put together a payment plan so you can be one of the first members in the course. Now, as you can see, the very bottom is the link that will automatically take you to the sign-up page with the discount, and lots more information provided there on that sign-up page as well. But that's not a live link. But if you go to the chat box on the Go to Webinar column on the far right, you'll see in the chat box they have provided a live link there. Okay? To learn more or reserve your spot for the course, just use the link it says, and then click that on. It will automatically take you to the sign-up page and you can get more information. But I would strongly suggest calling up Pro Trader Strategies. Get more information from them. There's no obligation, and they can set you up really quickly with a payment plan. So I'll leave this information up here on the screen while I open up the question and answer box. And I'll take the first question. It says, Steve, does this work on futures? Yes, it does. All of our strategies and methods, most especially strategy 4, the PET-D, ATM, they can all be applied to the Forex and the currency pairs as well as futures markets. Any time frame. A lot of our traders who trade stocks also like to intraday futures. Everything can be transferred over, okay? And we show you how to do that. Let's see, JJ is saying, what color are the PET-D bars? Good question. The PET-D bars are only two colors, green for a short-term uptrend and red for a short-term downtrend. And they don't change once the bar is completed. So in other words, there's no repainting. I know a lot of traders are very disgusted with some indicators they get, and they see that a bar closes red, and then they go back later and they see 5 minutes later that the bar changed colors to green, or now it's a different look. That's not what the PET-D does. Once the bar closes, it stays that color for life, okay? Because the PET-D only calculates what is happening at that moment. It's such a fine-tuned formula. So that's what it's doing. Once that moment is concluded, the bar has concluded, it goes on to the next bar. Then we show you exactly how to apply it correctly, though. Most traders, if they just had the PET-D on their own, would most likely lose money because they think it generates buy signals, it generates sell signals, it picks tops and bottoms, it tells you how long it's going to be in a trend. PET-D does not do that. It just tells you at the moment what the trend is. Then we know how to apply a strategy to that trend, okay? John says, how many hours total is the training? Well, it's 6 weeks. Each class is minimum an hour, so that's 6 hours. But I tell you, the last college we had, some of the classes were 2, some were even 3 hours. So it all depends on the amount of students we have. We like to keep it to roughly anywhere from 20 to 50 students. We don't want to go any more than that because then the class will get way too big and it'll take too long to answer a lot of the questions, okay? So we like to keep it very intimate. It's all done online, but you're referencing me and hearing my voice and speaking to me online as well, okay? So each class is roughly a minimum of an hour, and then everything is recorded. So if you can't make that particular live class, you can always go and watch the recording as well, okay? Nabil asks, if strategy 4 and 8 generate the same signal, does that make the signal much stronger? That's a great question. I can't share with you that there are any statistics that say that it's true, but we have found whenever we have strategies that generate multiple signals, or in other words, whenever a bar generates a multiple signal, there has been in the past higher levels of consistency that we found on site, okay? So that's just by site value. There's no statistics to prove that because we really aren't a statistical company. We're all about educating you, and everyone trades according to their own parameters. So we can't keep stats for everyone's parameters. There's just too many ways to trade this. But we will tell you, our students have told us that they only take signals with multiple strategy verifications because they feel there's higher signs of consistency. So that's fine. That's great. Any other questions? These are all great questions, and we cover these in detail in the courses. But remember, if you aren't able to make the classes, they are all recorded. But the best thing is to actually be there. And what we do is we take a poll of all our students, and find out what the best time and what the best day would be. So we try to make it best for everyone. So if by some chance, it works better on the weekend, I will give weekend classes. If everyone agrees that Sunday morning is the best, I will do a Sunday morning course. All right, I'm not saying that they are, but if everyone did that, I would provide for my students. If everyone says Friday at 9 a.m. Pacific time is best, then we'll do it then. Or Tuesday at 6 a.m. Pacific time, I will do it then. Okay, it all depends what the majority of traders want in terms of the class. And it will go anywhere from 1 hour to 3 hours. Okay. Remember, our goal is to teach you these things. All right. We have go to Pro Trader Strategies, go to my own website, Specialist Trading. You will see the testimonials from past students saying that for the very first time in their life, they've been trading for years. For the very first time, they became consistent. This is our goal. We want to make you a consistent trader. We're not promising you the world and saying, oh, you take this course and you'll be able to buy that dream house or go on that dream vacation. We don't believe in that. But we can say is, listen, we've had this course. This is the third course we will be giving. Go on and see the testimonials of all the number of traders who for the first time in their lives have become consistent. This is what we're trying to instill in you, okay? Larry asked, what are the charting services that the PET-D works on? Good question. The PET-D I'll list off the most popular charting services or charting platforms, and then I'm sure there are many more, but the most popular ones are TradeStation, Metastock, MT4, FXCM, NinjaTrader, and you can also apply it to Thinkorswim, but with Thinkorswim, they don't actually allow us to apply the actual PET-D and the signals because that's just the way they're configured, but they will allow us to use their data. So we just borrow the data from Thinkorswim and we give you a free NinjaTrader platform which uses that data, and so you can have both platforms up and running at the same time. And plus, we do all that for you. It's all in the tech support agreement, so free of charge. There's nothing you have to pay for. It's all included. So we get you included with the setup and all of that. And if you look in the chat box, there's a list of all the different. There's also Sierra Charts, interactive brokers as well. And so there's lots of different variables in which to apply this with different charting services. We're going to have more in the future as well. So the best thing is to contact Pro Trader Strategies. If there may have been a couple of platforms I missed, they'll know for sure if I didn't mention them or they're not on the list, okay? But we have the most popular, and all of our methods can be applied. The PET-D as well as our strategy indicators can be applied to all of them as well, okay? So look back now. We're coming into April, and in just a few days, we will be starting the 4th month of the new year. And ask yourself, is your trading anywhere near where you thought it would be this time? Okay, most traders at the very beginning of the year make all these hopes and dreams, all these wishes and all these goals of where they want to be. And I can almost say that the majority of traders never meet them. In fact, they know by the end of the first quarter that they're never going to be there. They've probably suffered a series of losses, or maybe they've had one major loss where they've closed up shop and they can't even trade anymore. If you really want to get on board and make yourself consistent for the very first time, I would strongly urge you to be a member of the Stock College course. I'm with you every step of the way, okay? I'm going to be there in every class. I answer every email, and I'll be trading right alongside of you. So if you're interested, remember, use the 3 rules I shared with you today. I see a couple of questions saying, well, what do you think of this stock? What do you think of this? Well, I just gave you 3 rules. You can go ask for yourself. Remember, it's not my goal to tell you what I think of something. That's the way we're trained. We're always trained to ask somebody to tell us what to do. You just have 3 extremely powerful rules that I gave and shared with you today and revealed that are a part of our college course. Go use them. See what, if you're looking at a particular stock or an ETF or a future, go use them right now and see if they can help you. All right. And then you will know for the very first time, wow, I'm in charge of my own trading decisions. I don't need to rely on somebody else. So that's the beauty of what we teach you and what we try to instill in you, so that you don't have to use the most common question, which is, what do you think? What do you think of this stock? What do you think of this market? You should be able to answer that on your own. And that's the goal of this college, so that you don't have to rely on anyone, and most especially you won't have to pay anyone to tell you what to do. I mean, can you think of that? Paying someone to tell you what to do? It's like, giving someone money to tell you what to do with your money. You should be able to make that own decision, okay? Yes, no snowflakes a lot. But listen, we know everyone comes from a different spot. And I'm not saying that I'm above that, because I was right there myself. I make no bones about it. I've said in all my presentations, my first 2 years, I struggled tremendously. And I probably did the same thing that most of you have done or are currently doing. And it doesn't work. I'm here to tell you. So why waste your time? I don't want you to waste 4 decades of your life until you finally see that you know how to trade. We're trying to lessen your learning curve here so that in 6 weeks, you'll get onto that road to consistency, okay? So remember, if you have any questions, contact Pro Trader Strategies. I really thank you for coming today. I hope you get something out of those 3 rules. Start researching them right now as soon as you can and see how powerful they are. And I look forward to all of you becoming students of mine and members of the Elite Stock Trading College, which is going to start in the near future. Thank you so much. I'll see you next time. Bye-bye.